Bit of a cautious day's trading ahead of the European summit. For his take, I spoke to Marcus Padley from Patersons Securities. Well, Marcus Padley, it's a bit like last week, really. Up on Monday, down on Tuesday, and all sectors bar the miners down today.
Yeah, Tiki, the resource is doing a little bit better. It's just having a bit of consolidation. That sector's down 25% from the top in a market now down 15% from the top. And something like banks are down 10% from the top. So resources have been doing a lot worse. And that's one of the worrying things. We're all watching Europe. Maybe we should be watching China. But just to put this rally in perspective, as of today, the market's come up just over 10%. 95% of that rally happened in the first 4 days. And here we are 15 days in, and the expectation is that all investors are a bit foolish because they've not bought into it. But the truth of the matter is, how can you throw away 6 years of the market going nowhere and the sentiment that created, 6 months of a bear market, concerns about a GFC when you've lived through one before, and in 4 days you're supposed to throw all that on its head and start buying the market. Obviously, no one can flick the sentiment switch that quickly. If you look at the volumes, they've been very low in this rally.
Yes.
People haven't bought into it. Almost everybody's missed it. Nobody should feel foolish. And to be saying buy ahead of this EU summit, I think is probably reckless at this point.
Well, let's go to some stocks. At its AGM, the board of Pacific Brands faced shareholders who were distinctly unhappy about the executive remuneration package.
Yes, CEO paying herself, or the board paying the CEO $2.3 million for a stock that is 82% down from its 2007 high. And has really been a terrible performer. And they had all sorts of excuses why they should pay the board short-term incentives because things in the company had changed, like the cost base had gone up, cotton prices, in other words, and Kmart stopped using their underwear. And that sort of structural change was an excuse for them to continue to pay big salaries. That didn't go down very well, and 52% of shareholders voted against it. But basically, a stock whose trend is not about to turn around, and clearly management under pressure.
On the other hand, another retailer, Billabong International, actually seemed to please shareholders with its AGM commentary.
Yeah, they reiterated guidance. And I think in a retail environment where everybody's calling it challenging, any retailer that doesn't say it's challenging gets a relief bounce. And that's certainly what we saw in Billabong, who's up 8.6% today. Whereas on Pacific Brands, you're going to see downgrades tomorrow of 5–10%. No downgrades on Billabong tomorrow will be seen as good news.
Marcus Padley, thank you again for talking to us.
My pleasure, Tiki.